Welcome back everyone. If you're new here, I'm Eddie V, and on my channel I'll discuss investing in stocks and ETFs. Today I'll be going over a comparison between two different ETFs, the first being VTI and the second being VOO, in order to help you decide which one is better for you to have in your portfolio. So I'll give an overview of each one, covering their holdings in the sector, and also I have a sample portfolio that I'll put each one head to head. Before getting into a comparison, if you find value in this content, do me a favor and smash the like button, and with that, I'll roll the intro. Before getting to the comparison, just in case you don't know what an ETF is, the ETF stands for Exchange Traded Funds, and it's basically a basket of stocks that tracks a specific index. So both of these two ETFs are both Vanguard ETFs, and VTI is Vanguard Total Stock Market ETF, and VOO is Vanguard's ETF tracking the S&P 500. So over in Seeking Alpha for VTI, at time of recording, the stock price is $226.28. We can see down here that the 1 year it has increased just about 9%, so it's 8.95%. Now within the last 6 months, it has decreased by 1.77%, and the last month is decreased by 3.81%. Looking over here on the right, we have the 52-week range, and it's above its midpoint, and the expense ratio is 0.03. Now what the expense ratio is basically what you were paying to have this ETF managed. And both the ETFs are passively managed, and just for some context, a 0.03% expense ratio will cost you $3 if you invested $10,000 into this ETF. So it's very low cost. This ETF also pays quarterly dividends, and they'll be at 1.3%, and they'll roughly give you about $3 annually. For VOO, the stock price is $410.59. This last year, it has increased 13.59%. The last 6 months, it has increased 0.03%, so pretty much stayed the same last 6 months. And the last month, it has decreased by 4%. Also looking at its 52-week range, it is also above its mid-range. And going on here, the expense ratio is the same as VTI at 0.03%. It also pays quarterly dividends, and its ratio is 1.33%. And that'll give you roughly about $5.50 annually. Now we're going to be looking at the holdings and sectors that are comprised in this ETF. So for VTI, on the holding tab, scrolling down here, for this ETF, the breakdown of each of the sectors, looking here for technology, it's at 26% of the entire ETF. Healthcare is 13.3%, and financials is 12.8%. Scrolling down for the top 10, the first couple, we have Apple, Microsoft, and Amazon. So for Apple, it makes up 5.7% of the entire ETF. Microsoft makes up 5.2%, and Amazon at 2.97%. And just looking at some of these other ones, we have Alphabet, which is Google, we have Tesla, Meta Platforms is Facebook, and then we also have another instance of Google, Nvidia, Berkshire Hathaway, and United Healthcare. And these top 10 holdings make up 24% of the entire ETF, and the total number of stocks in this ETF is 4,143. We're going to go to VOO and look at that sector in top 10. So over in VOO, scrolling down, looking at the sectors, we have here, the top three are also technology, healthcare, and financials. So technology makes up 26% of this ETF, healthcare makes up 13.3%, and financials make up 12.8%. So fairly the same amount of breakdown as far as sectors goes. And scrolling down for the top 10 holdings, once again we see Apple, Microsoft, Amazon, Google, Tesla, Meta Platforms, Nvidia, Berkshire Hathaway, and United Healthcare. So they're exactly the same top 10 holdings. But what is different is the percentage that makes up in that ETF. So going over here in Apple, Apple makes up 6.83% of the entire ETF. We have Microsoft at 6.2 and Amazon at 3.59. So that's where some of the difference is. And mostly the reasoning is that there's less amount of stocks in this ETF. So looking down here at the bottom, we can see that this ETF is just comprised of 510 stocks. And just looking at the top 10 makes up 29% of the entire ETF. And moving over to Morningstar, just to give you a little more in-depth on how it's broken down. Over in Morningstar, I'm under the portfolio tab. So for VTI, I want to focus on the stock style right here. Now this little graph will give us a breakdown of what mainly is comprised in that ETF as far as small, mid, large cap, and also is it leaning more towards the value or growth. So looking here at VTI, we can see for this blue is mainly on the upper side of large cap stocks, and it leans more towards on the growth side. Next, scrolling down, I want to look at this style measure, and I want to look at the market cap just to have a breakdown of what the percentages is. So we looked at the visual kind of aspects up here, but I want to see what the percentage breakdown is. Over here, for the giant and large cap, kind of categorize those together. It makes up about 70%, 71 to be exact. And for the mid cap, it makes up 19%, and small and micro comes in around 8-9%. So that's kind of the breakdown of the category of all the stocks that are in. So you do get, since it is a total stock market, it's basically comprised of all the stocks in the US. Now over for VOO, under that portfolio tab again, looking at the stock style, we can see here that VOO is much higher on the large cap kind of visual scale here. So it is crossing that line, while as VTI was underneath that line. And we are also still leaning towards the growth side. And scroll on here for the style measurement, giant and large cap makes up about 85% of the entire ETF. And we do have a 15% of mid cap, but not really showing any small or micro stocks within this ETF. So last thing I want to go over is I set up a sample portfolio of each of these ETFs, and we can track over a historical view what it would look like over a long period of time. To do that, I'm over in Portfolio Visualizer. So just to give you an overview of how I set this up, I just started year at 2000 through this year. And just for a little background, VTI was created around 2001 and VOO around the end of 2010. So even though I set the start year here at 2000, when we look at the graph, once I scroll down, it'll be starting at 2011, just because to have both of them as a comparison, they have to start at the same time. The starting investment I'll have is 10,000. I'm going to make monthly contributions at 500, kind of simulating if you have this in IRA, so you can have monthly contributions of $500 to meet that 6,000 limit. And I set this up at monthly. You can also do quarterly or annual. And I put in inflation, so I'll adjust for that. And right here, I did name these customs so we can see when we're looking at the graph. So the first one being VTI and then VOO. So right here, if you're using this, you can set different assets in your portfolio. So first, the portfolio 1 will be 100% in VTI. Portfolio 2 will be 100% in VOO. Scroll down here. This is just a kind of visual of what your portfolio looks like. And right down here, look at both of these portfolios. We can see with the initial contribution of 10,000 over this 11 year span, we have VTI would be 214,000, and if you invest in VOO, it would be $221,000. Now, just looking at both these numbers, it doesn't mean that one will always outperform another. Just looking at this whole entire graph, they're fairly close to each other. And as some instances, VTI may raise above VOO, and others VOO will be ahead of VTI. And just for one comparison, over here at the beginning of 2021, we had VTI was increasing more than VOO, and that really plays a part into that VTI has those mid and small caps. So it really depends if those mid and small tier caps are growing rapidly, VTI is going to outperform VOO. However, on the other direction, if like in March 2020, those small and mid caps are going to be hit a lot harder. But you can see here that there is a bigger gap between VTI and VOO. So just kind of giving an overview that throughout long periods of time, VTI and VOO will potentially are going to be swapping and outperforming each other. But over a long period of time, they're practically going to be very similar. And just to summarize, you really can't go wrong whether you go VTI or VOO. It really comes down to if you want simplicity or flexibility. So with VTI, if you have that in your portfolio, it already covers your large, mid, and small cap, and they set those percentages. However, if you wanted to be flexible in setting those percentages yourself, you would lean more towards the VOO. So you would have your large cap, and you can use different ETFs for your mid cap and small cap. Now, I'd really like to know what you guys prefer. What do you have in your portfolio, whether it's VTI, VOO, or some other combinations? Personally, and if you've seen any of my other videos, you already know what I have in my Roth IRA, but I lean more towards the flexible side. In my Roth IRA, I have VOO. For my large cap, I use VO for my mid cap and VB for the small cap. And in M1 Finance, I have that flexibility of changing the percentages I have in each of those categories. Whereas if I had VTI, I'll be dependent on how that ETF is structured for those categories. So that's why I went the VOO path. And speaking of M1 Finance, down in the description, I do have a referral link down there. It'll open up and you can see the whole breakdown of how I created my pie within M1 Finance. And also if you open up an account with them, at the time of recording, they'll give you $50 and they'll give me $50. So win-win situation. Definitely check it out if you're interested. And if you found value in this content, let me know by smashing the like button. And if you haven't already, consider subscribing to the channel and turn on notifications. And I'll catch you in my next video. Peace.